Everybody. This is Carl Streck from Mountain Seed. Appreciate everyone for joining this afternoon. Really excited to welcome Holly and Brian from AEI. As many of you know, I know we've got lots of clients on the phone, but we have some folks that are yet to be clients. But Mountain Seed obviously serves many hundreds of community and regional banks and credit unions on the appraisal space. But we recognize that as part of everybody's role on the phone in the evaluation due diligence world, it includes many other things. One of which is obviously environmental reports. And so I'm excited to welcome Holly and Brian, who are clearly experts in the space. Many of you have worked with AEI in the past. They are a national and international environmental firm that handles environmental, property conditions, various consulting for health and safety, property condition, all kinds of stuff that I'm sure they'll go into on the call. Brian is a vice president at AEI. He's been doing this for many years, working with their teams of engineers, environmental professionals, and then also I'm excited to have Holly Niebuhr join us on the call, who's the CEO of AEI, and also widely recognized in the environmental profession, but also in the general commercial real estate world as president-elect of CRE, the Commercial Real Estate Women Network, and has been recognized in a variety of other ways. So I won't belabor all that, but I want to give them plenty of time to share their insights. So with that, I'm going to turn it over to Holly and Brian. Thanks for joining us today.
Thanks very much, Carl. Can you hear me?
Loud and clear.
Okay, awesome. Yeah, so thanks for the introduction and for the invite. Mountain Seed is definitely a leader in your industry and appreciate being associated with you. And thanks for the background on AEI. I think you covered it great. Just a little bit more information about my background. I started out in environmental consulting in the mid-90s, so I've been doing environmental for a long time, have an environmental science degree, and spent many years performing Phase 1 ESAs myself. And over the years, the thing I get most passionate about is the creative problem solving and consulting to really help people meet their goals while keeping environmental risk managed. And I know many of you on the line have a very wide variety of concerns when you're dealing with any particular loan, and environmental is just one small piece, but I'm hopeful that we can add some value to you today. I'm also involved in a group called the Environmental Bankers Association, which I'll talk more about later, but I think it's a really good resource for you. And that's where I learn a lot about what the risk managers at the major national lending institutions are doing in terms of environmental risk. And so I'll be sharing some of the knowledge I have today from that organization. So today I want to cover the main points listed here: why perform environmental due diligence in the first place, what are the different types of environmental assessments, what are some typical recognized environmental conditions or red flag issues, and when those RECs are identified, what's the process? How do we handle that? And then I'll end with some helpful hints and resources. And as Carl mentioned, Brian's on the line with me. He has helped lenders from organizations of all sizes deal with environmental issues. So he's here as a backup, and we may have some questions from Carl throughout, and then I think we'll have Q&A at the end. So really looking forward to the conversation today. So why perform environmental due diligence in the first place? So environmental liability is a little bit special for lenders in that it's not exactly the same as it would be for a property owner. Through the Comprehensive Environmental Response Compensation and Liability Act, or CERCLA, lenders have liability protections. So, and there are ways in which you might accidentally void those protections. So we do recommend legal counsel be involved prior to foreclosure activities, for instance. But regardless of those liability protections, environmental risk comes down really to a math problem. Is the collateral worth what you think it's worth? Because unknown environmental issues can affect property values, as we'll discuss further. So environmental risks to the lender include impairment of cash flow of the borrower, a decline in value of the property, and certainly in the case of foreclosure, additional issues if contamination is present. lenders may choose to actually walk away from a property rather than take it back if the environmental issues are significant enough. So ideally, you would know about that stuff before you make the loan. So, as I said, why perform environmental due diligence? We'll certainly want to consider those math problems we talked about. The other benefit to performing due diligence is to the property purchaser, your borrower. Now, banks have different policies regarding whether or not the borrower can actually rely on the findings of the report that you might order, and you may want to get legal counsel to help you consider whether you want your consultant to extend reliance to the borrower. There have been some legal cases where an issue was missed on a phase one and the borrower held the lender responsible because the lender had chosen the consultant. So it's a complex issue that really we recommend legal counsel be obtained. But regardless of your stance on whether the borrower can rely on the report, there is still a benefit to the purchaser in that someone is looking at the site and identifying whether there are likely environmental issues that could affect the value of the site. If in case it's not clear, environmental liability travels with the title regardless of who causes the contamination. So once they buy it, the issues are theirs. So how do lenders decide when to require an assessment? Well, each lender typically has their own environmental risk policy, and the policy stipulates what triggers the need for an environmental assessment. Many lenders follow a policy similar to that used by the Small Business Administration, in which the nature of the property use and the loan amount are used as factors in the decision tree. So from talking to our lender clients, we hear that when institutions are audited, the auditors typically want to see, number one, that you have a policy in place, number two, that the policy is being adhered to, and then three, if there are exceptions are being made to the policy, that there's documentation of that. If there are reports containing conditions or recommendations, they want to see that those recommendations are implemented and that the risk officer has verified completion. Some bank policies include the use of transaction screens for low-risk sites. Other policies allow for a database review and questionnaire for low-risk sites. And other lenders may require custom scopes of a transaction screen. And we're going to talk about the difference between a phase one and a transaction screen in a minute. We'll also talk later about what are typical high-risk properties. But one reference for that, if you're putting together a policy, is to look at the NAICS codes of environmentally sensitive industries that the SBA uses. So Small Business Administration, SOP, outlines their risk policy, which I think is a good model if you're just looking to build or refresh your own. And you can find a copy of that on AEI's website under Resource Center Industry Documents. Other parties that may require environmental due diligence include your borrower may have already obtained a phase one. If you're working with a sophisticated borrower who understands environmental liability, they may have already obtained a phase one of their own. Brokers or agents, if they want to see if there are issues prior to marketing the site. Property managers may get a phase one before releasing a high-risk tenant, or sellers may want to get a phase one to provide a complete due diligence package. And we as consultants really love to see prior reports. They provide kind of a moment in time view of the activities and conditions at a site that we really can't get anywhere else in the paper trail. So it's not that we're trying to get away with doing less research. It's that every single document on a property is part of the detective work that we need to look at. But I would say with a caveat, when you get a seller prepared phase one, you kind of have to think about what were the motives behind the people that ordered that report, and what is their relationship to the consultant, and what is the quality of that consultant. So just be cautious that, and maybe from the outside looking in, you would think consultants are all the same and you're going to get a consistent product across the board. But the fact is that there is a lot of variety in the types of consultants and how they view risk. So you need to make sure you're aligned consultant-wise in terms of risk. And it's always helpful to get another look at a report if it was prepared for someone else. And certainly your policy should cover whether or not you'll accept borrower-provided reports and what level of review would go into that. So what are environmental assessments? I just think it's important to clarify what we're actually looking at, because sometimes people don't realize exactly what we're looking at. When we're talking about a phase one or a transaction screen for lender due diligence, we're primarily focused on identifying potential contamination that could affect the property value. So this is generally focused on soil, groundwater, and soil vapor on the subject property and nearby sites, because nearby contamination can affect subject property value. But we don't typically include a compliance audit, endangered species assessment, or other types of inquiries unless specifically requested. Now, a compliance audit could be something that's very valuable to you, especially if there's lending on the business operations as well, and those operations include a lot of environmental compliance issues. You know, sometimes stormwater violations can exceed the cost of dealing with, you know, hot topics like an underground tank or something. So it's not that it's not important, it's just that you need to ask for it specifically if it's relevant to that assessment. So what are phase one ESAs and transaction screens? Just real briefly, those scopes are outlined by the American Society of Testing and Materials, and the phase one is the more extensive of the two. Only a phase one ESA performed to ASTM 1527 meets what's called all appropriate inquiry as defined by the Environmental Protection Agency. So all appropriate inquiry, or AAI, protects the user, which is typically the purchaser, under the innocent landowner defense. So lenders are typically not trying to achieve AAI since you have your own protections, but your borrower may be seeking AAI protections, which is why I mention it here. So the innocent landowner defense protects buyers from liability as long as they do their due diligence before buying. So you can claim you're an innocent landowner if something is found later, as long as you actually looked when you were buying the property. The protection is only under CERCLA, so it doesn't protect you from all potential agencies coming after you, but it does give you some protection. We mentioned this here just to state that there are many reasons performing a phase one, and for us as consultants, it's really important we understand who our client is and what they're trying to achieve. The goal for lenders and purchasers may differ slightly, but everyone is on the same page in that wanting issues to be quantified so that informed decisions can be made. One other note on phase ones and the ASTM standard is the shelf life of a phase one, which is 1 year. If it's older than 1 year, you may want to consider whether a new report is needed. And in fact, some of the components of a phase one expire 6 months. So some borrowers may want to rely on a prior report. They may say, oh, Bank X just did the loan for me 5 years ago and it was fine, here's the report. Just be aware that the conditions may change, especially if operations have changed, and also that the purpose or risk tolerance on the last report may differ from your goals or perspectives. And as I said earlier, you know, your consultant that you work with today may understand your risk tolerance better than whoever did the report 5 years ago for the other bank. So always be aware when someone's trying to get you to look at an older report. Also, you know, I would say that we do look at things slightly differently if it's a new loan versus a refinance. In the event of a refinance, all the stuff about AAI and so forth doesn't apply because your borrower already owns the property. So it's important for your consultant to understand that too. So what is included in a phase one? Well, we conduct a site inspection and interview the owner and occupants of the site. We review regulatory database listings of release and hazardous waste generator sites on the property address and surrounding areas. And we conduct research at local and regional agencies to document the property history of operations. And I really look at it like we're writing the life story of this property. And it's amazing how short people's memories are about a piece of land. But once we go back, we try to get back to first developed use or 1940, whichever was earliest, and just really write the life story. And basically what we're trying to say is, based on this life story, is there an environmental issue that could potentially be here that would affect your property value or result in liability for your borrower? So one of the historical resources that we look at, which back when I started in this industry was kind of fun and unique, was aerial photos. Now everyone's so used to looking at Google Earth that it's not a special skill anymore, but this is an example of what we're looking at with aerials. And in this case, you see a former gas station on the corner. We also look at historical Sanborn maps, and you see how the type of occupancy is also listed. Sanborn is actually just one type of fire insurance map that listed the occupants related to fire insurance back in the day. And this is often available in major metropolitan areas. Here's a zoom in on what a filling station looks like in a fire insurance map. You can even see kind of the fueling islands there. So these are some of the resources we're looking at when we do our detective work. So when recognized environmental conditions are identified, your consultant really should be talking to you. We say that bad news never gets better with age, and also sometimes when we bring up a concern, a person that's involved with the transaction may suddenly be motivated to provide more backup information that they didn't realize was important before. So we try to keep everyone updated, and whoever you're working with as a consultant should do the same for you. We always want more information. It's just better if we have it earlier in the process. If there are concerns, they may be categorized into two types. The recognized environmental conditions are the ones that typically lead to some recommendation for additional sampling, or you may have business environmental risks, which are things we want you to be aware of but perhaps don't require additional sampling. Within the recognized environmental condition REC category, there are two subtypes: historical recognized environmental conditions, which are RECs that have been dealt with and require nothing further, and controlled RECs, which are RECs that have been dealt with and have ongoing responsibilities to manage that issue in place. So some typical RECs and red flag issues, just to kind of give you a heads up when you're looking at new loans and thinking about, I wonder if we're going to have any issues on this. I'm going to run through a few that are very common here. So dry cleaners are definitely a very common issue. We find subsurface impacts at about 75% of the dry cleaners at which we perform subsurface sampling. Lenders have different policies in regards to dry cleaners, but in general, I would say most will require phase 2 sampling for operations of 5 or more years in duration. Some will require a phase 2 for a dry cleaner that has operated for any length of time. Now, do be clear that a drop-off cleaners where cleaning has never been performed would not be subject. It really is based on the plant, the on-site plant being there. The main risk factor is, was perchloroethylene or PCE used on-site? So those dry cleaner solvents, PCE, if they were used on-site for any length of time, there's a risk. Now, you often have maybe sites now that have the green, quote-unquote, green cleaners on site. They are lower risk, but just be aware that oftentimes those machines were installed in the last few years, replacing PCE equipment in the past. So we really are looking at the history of occupancy and understanding what were those operations through over time. Gas stations are another common red flag. Today there are many requirements in effect that reduce the risk. However, most stations have had numerous generations of USTs, and releases do happen over time. Here's a photo of an older UST, just so you can imagine how leaks could develop in a tank like this. This is a visual of what happens when petroleum products are released from USTs. The contaminants spread in soil and then reach groundwater and migrate further. And in addition, within the soil is soil vapor, the air between the soil particles, and this can also become contaminated and migrate from the immediate area of the release.
Hey, Holly, I have a question. So I feel like these typical kind of properties with issues, like the dry cleaners and the gas stations, you intuitively, or you've been taught that those are something that would require some form of environmental assessment. But so a borrower walks into my bank and is borrowing money on something else that's not a gas station, but might be next to a gas station. So your slide that had the soil, groundwater traveling, stuff like that, and they do not have a phase 1, and I have no reason to believe they need one. What should I do in that situation to help understand if there's environmental risk associated with the property? Could the fact that it's next to a gas station be an issue that I should be aware of?
Yes, definitely. So off-site releases can represent a concern for a subject property. I guess the most obvious case would be, for instance, a shopping center with a dry cleaner with a significant contaminant plume. I mean, some of these plumes from dry cleaners can extend over a mile. So it's not even just next door, it's in the vicinity. But let's say your borrower runs a daycare center next door to a dry cleaner facility that's had a release, and that soil vapor has been contaminated and is underlying the daycare center and entering the structure. That's your worst case scenario, and that's why even if your borrower walks in and says, I have a low risk site, it's just a dry cleaner, it's just a daycare, I don't need a phase one. Like, really, they do need a phase one, because the phase one would identify this issue. And what would happen is we would see this in the regulatory database report and in our site inspection, and then we would go to the regulatory agency and we would find out how much sampling has been done for that dry cleaner, what are the levels that are present on the subject property, and what type of health risk does that pose to the subject property occupants. And that way everyone can make an informed decision. Oftentimes the regulators can get involved and require that adjacent owner or nearby owner to take mitigating measures to help the subject property be occupied safely. But ideally you know about all of this before you're involved and already on title with the subject property, because you do have, as property owner, liability to your occupants. And if you also run the business, you have OSHA liability to your employees.
And so would something like that be found? I know some folks on the call have ordered like a database search with an opinion from AEI. Would some of that stuff be found on one of those kind of lower cost products, or is that not sufficient?
Yeah, so if the site has a known release and it's in the regulatory record for having that release, then I would imagine, flag it, and it would be listed as a high risk, and that we'd be recommending further investigation, meaning go in, review the regulatory agency files and see what's going on. I just, the only caveat I would say is there are a lot of dry cleaners out there, just as an example, that haven't been investigated yet and aren't listed for releases yet. And agencies are not proactively going out there and saying, there was a dry cleaner here for 20 years, let's drill and see if there's a problem. They're really only being brought up when the properties are financed. So if you're relying on a database review only, you could be missing those sites that have not yet been discovered.
Gotcha.
Does that answer it? Okay.
Yeah. No, that's helpful. I mean, I think
Okay.
what I'm trying, when I see the folks on the call and I think about, what their concerns are. So often I hear people say, we don't handle the environmental. The borrower typically orders a phase one. My question for the folks on the call would be, if there's a property that doesn't fall within one of the property types that are of concern, what should I do as the lender if I'm sitting on the call today? What should I do as the lender to make sure that I've done some sort of due diligence? Maybe the answer is, nothing if it's not within those property types, or maybe the answer is, you really should do some level of due diligence to see if there's a phase one that needs to be ordered.
Yeah, I think it's really good to look at the subject property. Just recalling, again, like I said, people have a really short memory, and the person selling the property might say, oh, it's always been office building, but, and we're going to talk later, there are some free resources that you can double check your own to just see, well, what was it 20 years ago? But also keeping a wider view and looking at what's in the surrounding area and are there concerns there. And always, if you feel like there may be something and you're not sure, call your consultant and just say, hey, what do you think about this? Do you think this is a high risk? We're always happy to talk it through with you or your borrower. But just remember, if a lot of the people on the call are having the borrower provide their own report, oftentimes I find a borrower really gets their heart set on a piece of land, like they're emotionally connected to it. This is the perfect building for me and my business or whatever, and they really think this is going to solve all their problems. and the environmental seems like an afterthought, like it's like the title report. It's just not considered core to the decision that they're making. And I just would reiterate that once you're on title, whatever those environmental issues are, they're yours now. And it's unfortunate. Certainly you can go back and sue whoever did the dumping or whatever 20 years ago, but that person may not exist. There may not be any money in that entity. So, you know, I just hate for someone to invest everything, and sometimes if it's a business, this is their only investment in real estate, and then find that they've really, you know, spent a lot of money on something that's worth way less than they thought based on the environmental cleanup that's required, and of course just the headache and the fear of having to deal with it all. And we'll talk more about creative solutions. Environmental issues don't have to end a transaction or kill a deal or kill a loan. Our goal is to just make sure everyone's aware of what the issues are, and so the risk can be managed. So let me just blaze through a couple more of these slides here, and then we'll get to that. So heating oil underground tanks are another issue that we often see, and sometimes properties have been converted to heating oil, to natural gas, but the heating oil tanks were never removed. So we'll find those on occasion. Those are not a big dollar deal to deal with. It's just that they should be dealt with at some point. Hazardous materials handling and storage can be a risk factor. Not that we would always recommend sampling, just it's a risk factor. So if you're often walking these sites with your borrowers and you're taking a look around, this is a good example of good housekeeping, right? They have the materials in secondary containment on this platform. There's not very much staining on the floor. It looks like a very good operation, and you can kind of infer a lot about how they manage their business and their property based on how they handle the little stuff, right? Versus this type of a situation where you see a lot of staining on the floor, which is a concern, especially if the concrete is in poor condition. And in this case, it's a waste oil tank. So what goes into waste oil tanks is not just often the waste oil, but also things like degreasers, which are solvents similar to what they use in the dry cleaning industry. So it's just a kind of, I'm trying to give you a little heads up if you're walking around these sites. Housekeeping is an issue that can make or break something with just hazardous materials usage. So other sites of concern are listed here. It's important to note these types of operations wouldn't automatically lead to a subsurface sampling recommendation. There's a lot of factors we look at, including the duration of occupancy, the nature of the operations, what chemicals they use, whether there were subsurface features that drain to the subsurface, whether there's a regulatory oversight record. We put all this information together to make a judgment call about whether a release is likely to have occurred. And I also wanted to note a common misperception, which is that if the subject property has an NFA or no further action letter from a regulatory agency, that everything is always going to be fine. I think people think, oh, there's an NFA, it's a silver bullet, everything's fine. It's important to remember that an NFA is typically associated with a specific issue or release, and any given site may have had a number of issues or releases. So for instance, you could have a gas station with an NFA for the tanks that were removed in 2004, but no NFA for the waste oil underground tank that was removed from another part of the property. And a lot of the gas stations, a lot of the convenience stores we have today were former auto repair sites. You know, they realized that they make more money on sodas and stuff, right? But those places all had waste oil tanks back in the day. So were those properly dealt with? So really what we're trying to do when we do a phase one is pull all the puzzle pieces together and make sure all the issues that have occurred over the years have been addressed. So when recognized environmental conditions are identified, we'll make recommendations about how we think you should address them. This stage is really a critical one for lenders. Some lenders may walk away from the loan at that time. Others may want to be more creative about making the loan. If this is someone you've had a long-term relationship with, you believe in their ability to repay the loan, and you want to help them make this happen. So the way we try to be creative is if there's an issue that can be quantified in terms of likely cost to address it. One idea is you may be able to do a holdback of a certain dollar amount to cover the fix, which the borrower commits to handling post-closing. You may find that there's state funding available to manage issues, and there are other options as well, environmental insurance and so forth. So this is where your consultants can be a big asset in helping you get creative as well as environmental attorneys and insurance professionals. So the idea is not that all environmental issues have to go away, but just that they be identified to all the parties involved and that the risks and costs are assigned to the appropriate parties. So our recommendations for smooth sailing are to start the environmental process as soon as possible. And it sounds like if a lot of you are using the borrower-provided reports, getting that copy as soon as possible, and possibly using outside reviewers if you don't feel like you have the environmental expertise in-house to take a look at those reports and give you thoughts. We know that some lenders want the appraisal first just to verify the property value, and we completely understand that. Just be aware that your consultants are navigating a variety of regulatory agencies, and it really depends. Sometimes they have all their information available online and it's very quick and easy to grab. Other times it can take weeks to get information requests returned from the agencies. So just be aware of wherever you're doing most of your lending, how long does it typically take to get a phase one completed, and work that into your process. We also recommend that borrowers work with lenders whose policies fit their typical property. For instance, some lenders really don't do gas station loans, while others are quite comfortable with those. So we help kind of navigate that process for some borrowers. And
hey,
lenders,
Holly,
yeah.
Oh, sorry, I was going to interrupt you for just 1 second, if you don't mind. So I've heard you a couple of times reference, and I see it on here on the slide, give your consultant good information, and if you have questions, you could ask your consultant. And obviously, everybody on the phone is a client of AEI, but let's assuming they weren't. What are things to look for when trying to find the right consultant to work with? Is it geography? Is it certain qualifications? I mean, how do you go about finding a good consultant, assuming AEI never existed?
Right. Well, I do recommend bringing consultants in. So maybe you come up with a list of 5 or so, bring them in and interview them and really understand, are they going to be an extension of your risk management team? In our ideal world, we understand what your lending goals are, we understand what your risk tolerance is, and we're helping you to get where you need to go. And we really want to be an extension of your team. So I would look for consultants who view it that way. I also think, one thing to kind of separate consultants a little bit is making sure they have proper insurance coverage. There's probably, there's national, there's regional firms, there's local firms, but you want to make sure that they have the right insurance coverages, so take a look at that. Of course, referrals from other lenders is a good way to go as well. But I think it really comes down to the relationship with the person you're interacting with most at the consulting firm, and making sure that they take their job seriously. There are third-party reviewer companies out there who, former risk managers, former consultants who help lenders vet out consultants and review reports, and that might be an option for you too if you don't feel like you have the expertise internally. Certainly, any of the consulting firms who participate in the Environmental Bankers Association are pretty locked into, what's important to the lending community, and, consultants who really participate in the ASTM committee, you can trust those folks to care about the ASTM standard and not just be kind of fly-by-night. So I don't know. I hope those are some helpful.
Yeah. No, that's really helpful. And in a similar way, I mean, you mentioned environmental reviewers. So when somebody does walk in, you have a phase one, the lender or somebody in credit underwriting or somebody's looking at the phase one. What should they be doing internally on the review of a phase one? Because I feel like most of our clients don't have environmental scientists on staff. How should they look at the phase one if they're trying to review it internally, or is that a bad choice to try to review it internally? I
really don't. I don't think it is.
Okay.
I mean, I do think it's good to have experts on tap to help you work through the complex deals, and maybe to help you vet out your consulting panel. I just think that ideally a phase one ESA should be very accessible and understandable by a layperson, and And if it's not, then I would call that consultant and say, okay, what are you trying to say here? Because you used a million acronyms and I don't get it. So just tell me, I'm a real person, help me understand. I really think they should be understandable. Now, I know that it's very tempting when you open these reports to go to the last line that says no further action is recommended. Awesome, close the report and be on with your day. But I would recommend that you really read the whole thing. And the reason I say that is because there can be information in a report that doesn't get brought to the executive summary, but that would turn out to be useful to you or important to you. There might be a consultant who doesn't quite understand what's important to you, or, I mean, this is how you vet them out as well. So, for instance, if your executive summary says there are no concerns, no further action recommended, but then you're reading the historical summary, and again, this is the life story of your property. It's really important and hopefully somewhat interesting, and you see that it was a dry cleaner or a auto dismantling yard or a landfill, or, you know, I don't think you need to be an environmental professional to kind of understand what those red flags are. And there's no discussion of that in the executive summary, then that's when you call the consultant and say, wait, why didn't you call this out as a concern? It really should be accessible and understandable for any person that's involved in commercial real estate lending, because it's just logic. I think that SBA SOP that I mentioned that's on our website, the list of environmentally sensitive property types, if you pull that up and print that out and put it on your desk and just kind of refer to that as you're reviewing these reports, maybe that would be helpful. You should always make sure that the report states it's in compliance with ASTM, that it was prepared by an environmental professional who's certifying themselves as such, that as I mentioned, that the consultant has their insurances in place. I often start by looking at the aerial photographs and the site plan first, just to get a visual understanding of how the site's laid out. And then I look at the site photos. Is there anything that kind of scares me or bothers me about this site? And then I review the report. And again, I just would encourage you all to read as much of it as you can get through. I know sometimes it's boilerplate language and it's boring, but there are nuggets of information in there that help you get a better grasp on what the property is all about.
No, that's awesome.
Okay. So what else can I say here? Just resources here at the back of our presentation. Of course, we're available anytime. Shoot us an email or give us a call. As I said, happy to talk through any situation with you guys. And Google Earth is a really good one too. I know everyone probably has a lot of experience using it, but I don't know if everyone realizes there's a clock tool that you can click on. And when you click on that, it shows you older aerial photographs that you can look at. That'll give you some idea of, you know, was this site really vacant land before they built this or not? There's often building records or title records you can look at. And if you're in California, there's a regional water quality control board site. You can search addresses for your subject property and nearby. And there's other states have similar resources. And if you are, you know, some lenders have a tiered risk policy where maybe they order that environmental database first off. I think that is, you know, something that you can look at the beginning. And if you see a concern there, then you up to the next level, whether it's a transaction screen or a phase one, and that we can be helpful to you. So lastly, I know I already mentioned the Environmental Bankers Association. That's envirobank.org. And even if you can't attend the meetings, which are held twice a year, there are great resources on their site, including tip sheets. I checked yesterday and I found some tip sheets and presentations on things like managing environmental risk for lenders, environmental policy building, top risk for lenders, integration of environmental and appraisal evaluation, things like that. So you do have to be a member to access that stuff, but I think the fee is totally worth it. So that's another resource for you. And with that, I'll just say thank you very much for the opportunity to speak. I certainly hope we provided value and would love to take any questions that there might be.
Awesome. So we do have one question waiting. And before I read that, just let everybody know if you have a question, there's a little question box on your GoToMeeting, kind of the side pane. So please type in any questions. This first one, I know you talked about who should be able to review the phase one internally at the bank, and I think it's, you know, I appreciated that a layperson should be able to look at the report and it should be clear enough from the consultant. what you should do. But this question says, who would be qualified to complete an outside review for a Phase 1 ESA?
Well, certainly you would want someone that qualifies as an environmental professional, and that's defined in the ASTM standard as a certain amount of education and experience in the industry. And there are a few firms that, as I mentioned, were formerly environmental risk officers within banks as well as being environmental professionals, and also one I can think of that has environmental attorneys on staff. So I guess I would just say look for people that specialize in that. There are firms that provide that service as well, and I mean, we can take a look at anything for you if you want, but it's good to have someone who's an independent party who's not trying to also get your Phase 1 business, if that makes sense.
Yeah, absolutely. Any other questions from anyone? Let's see. Well, if there's no other questions, and I don't see any coming in, right before I wrap up, just want to let everybody know that this recording will be available. We'll send it out to all attendees as well as the slide deck. If there were folks on your team, we do have some questions coming in, but if there were folks on your team that weren't able to attend, feel free to share the recording once we send it out. Let's see, I have a question coming in from Nevada. Describe a transaction screen is the question. Okay, yeah, didn't really go into that, did I? Okay, so a Phase 1 includes the site inspection, the regulatory database, and all the historical reviews that we talked about. A transaction screen is kind of like a mini Phase 1, so it's the site inspection and the database review, but a lot less on the historical and regulatory research. So it's, yeah, kind of like a mini. And it works on, you know, a good property type for a transaction screen would be multifamily, like apartment building that's always been apartments. You just want to be cautious that you're aware of the history of the site, because if there's any potential complex issues in the history, you'll want a full Phase 1. And then again, Phase 1s are the gold standard in terms of all appropriate inquiry protections for the borrower. Anything else, Carl? Oh, sorry, I was asking you a question while I was on mute. So a follow-up question from the outside review question is, does the person reviewing the Phase 1 need to be from the state that the property is located? Yeah, I would say no. I mean, there's definitely value to having local and regional knowledge, but I will say that those of us who've been in the business for many years, we have a good idea of what's going on in Florida or Georgia or Nevada, or, you know, and Nevada does have the CEM registration that's required for the preparation of the reports. But in terms of somebody helping you make risk decisions, I think they just need to have a general knowledge. I don't think they need to be located in the state. So there's no, is it fair to say, different than appraisal where there's a geographic competency element to it, there's no real benefit to being local in your world? I won't say there's no benefit. I would just say that there is a lot of communication within the industry. So if you're working with someone who is well networked, they know what's what in each state. Gotcha. But there's definitely regional knowledge, and especially if you're dealing with a release case, like I'm in California, I know regional water quality control board case managers. I can call them up and ask them questions. Brian's in Florida, he can do the same thing there. You know, we have offices all over. Just as an example, other firms the same. So I don't want to say regional knowledge isn't important. It's just, we're just not highly regulated the way appraisal is, or regulated the way appraisal is. So it's slightly different, and I feel like if you found a good reviewer who really understands your state, they don't have to be there. No, that's great. Another question, if I have a no further action letter, how do I know if there are other issues? Where do I go to discover other issues that might be on the property?
That would be the phase one ESA process. That's when we're looking at all the old aerial photographs, all the old maps, going to the building department, reviewing all the building permits that were pulled for that site, those types of things, regulatory agency records. We connect the dots of how many tanks were ever installed at the property, how many we know were pulled, which ones have an NFA. That's the type of connect the dots work that we're doing in a phase one.
If he, and I know you talked about this before, I just want to make sure I'm asking his question properly. So he's got an NFA letter. Should he just go ahead and get a phase one, or what is there an interim step there?
Well, you could always send the NFA letter to your consultant and say, hey, what do you think about this? From what you can see on online resources, or maybe you order a regulatory database review. So I think a lot of folks maybe are getting that database package first and then deciding what to do. You can always send that to your consultant, and you can sometimes if you get that, you can give the if you get that and you decide a phase one is needed, your consultant can often use that database report and give you a price discount on the phase one ESA. So it's not wasted money to order it first. So if you had that database report and you had the NFA letter and you send both of them to your consultant and said, here's what I know about the site, what do you think? I mean, most likely they're going to say, well, really we need a phase one to make sure we're connecting all the dots, but sometimes it's a really simple thing. Like, let's say the property was developed in 2015 and there was this one thing that was found and it's well documented and there's a lot of reports. Here's another thing I should say. If you have an NFA letter, there's probably a bunch of prior reports somewhere. So get your hands on all those prior reports and get those to your consultant. They can use all that information to make sure the dots have been connected. Gotcha.
Yeah, the person asking the question, I feel like I'm relaying a dialogue between you two, which is fine. He's saying, but if I have an NFA, and I know Jeff, who's asking the question, is on the credit side. If I have an NFA, my banker or lender will often tell me I don't need a phase one. NFA is used as a quote get out of jail free card.
Yeah.
Properties, that's his challenge.
Yeah.
I'm sure you see that all the time.
And I would just say you are not alone. I mean, this is, I think, one of the real values for anyone who is able to attend the EDA is you talk to these environmental risk managers or people that are in that position and underwriting. And, of course, the people making the loans are incentivized to make a loan. And so they just want everything to go forward, whereas you have a different role of protecting the institution from risk. So it's a tension that happens internally, and the only thing I can say is that education does help somewhat, and if there's, we come in and do brown bags, we do our dog and pony show and help educate people. We help the loan officer understand that their borrower, hopefully it's a long-term relationship that they're having with this borrower, and they want the borrower to be successful, and they don't want them to buy into a bunch of liability without knowing what they're getting into, hopefully. Maybe we can tap into that kind of angle a little bit, but it's just to be clear that an NFA is not a silver bullet. It may be if there was only one issue and the NFA is for that one issue, but sometimes there were other things and it wasn't dealt with, so they really need a phase one.
Yeah, that's really helpful. And I know that on the appraisal side, the way we deal with a lot of this stuff is by having a clearly defined policy. And so I don't know if that's a similar thing in your world, Holly, but potentially if you deal with it at the policy level, and then, as your lenders come in with their get out of jail free card, you've made the decision a long time ago at the policy level versus, kind of one-off choices.
Having to fight it one at a time. Yeah.
Yeah. I don't know how much you see that, but we definitely see it on the appraisal side.
Yeah, in fact, I hear from lenders a lot that they review their policy periodically, and they're always looking to update the decision matrix and reviewing those environmentally sensitive uses that they're requiring a higher level of due diligence on. For instance, something like a golf course could be considered a green, I just heard this on a call this morning, could be considered a low impact use, but actually golf courses often have fueling and, of course, pesticides and all that stuff. So again, back to that SBA SOP, like they have a pretty good tiered system for what due diligence happens at what level. And so if you have no policy or you'd really like to upgrade your policy, I would kind of take a look at that. And it was groundbreaking when they issued it, and it really has helped. And yeah, good point, Carl. If you have a policy,
Cool.
you can point to that and not have to fight it one at a time.
Cool. And then I think the last question, and then we'll wrap up. And I think you talked about this with the Environmental Bankers Association, but the question is there a government website or database that tracks qualified environmentalists who can perform phase 1 or phase 2s? Is there something like that, or would you still refer back to the organization you referenced earlier?
So there's no national. Well, I won't say there's no. It's not like appraisals where you're an appraiser and you get listed. There are a couple of different organizations. But they're really kind of like you pay to take a test to be able to use a designation. So there's no like nationally approved, like these people get the stamp of approval. There are within certain states, like I mentioned, Nevada has the Certified Environmental Manager. So you could look within the state of Nevada. Yeah, so I guess the answer is there is no national registration that you could refer to. I would just ask that when you are vetting your consultants, you verify that they do qualify as an environmental professional under ASTM, and they should be able to answer that question for you.
Cool. Well, with that, Holly and Brian, I'm super grateful for you guys for doing this. I learned stuff, and I'm sure people on the phone did as well. And so thanks for joining us. Obviously, if you have any other questions, Holly and Brian's email is there on the screen. That we'll share the presentation with you guys. Feel free, obviously, to email somebody at Mountain Seed if you can't find their stuff and want to reach out. We do offer a variety of products that AEI contributes to and performs through our system. So if you're ordering an appraisal and you need a phase 1 or a database search or something like that, we can obviously help you there, or you can go direct with them, whatever is most efficient for you. So with that, thanks everybody for attending, and look forward to, I guess, our next web series will be in the new year. I believe we're having a group called Sterling Compliance out of New England that's going to talk about flood and some best practices there. So excited to have them. But thank you so much, Holly and Brian, for your time, and hope everybody has a great rest of the week.
Thank you, Carl.
Thanks, Carl. Thanks for the opportunity.
Yes.
Thank you.
Bye, everyone.
Bye-bye.